Welcome to the Retail Insider video interview series. I'm your host, Craig Patterson, and we're joined here today with a special guest. This is Casdin Parr. He's Executive Vice President of Retail Advisory Services at JLL in Toronto. Welcome, Casdin.
Great to see you again, Craig, and hope things are well.
And now just a quick word from our sponsor, Sajo, Canada's first specialized retail builder. Visit the link in our show notes to see Sajo's holistic approach and transdisciplinary team to explore and understand your needs. Now, back to our podcast.
The Canadian economy's had a little bit of an issue here in terms of, we've seen inflation, we've seen consumers struggling. Let's quickly talk about the sentiment that you're seeing in terms of retail leasing in Canada right now. Are things still bullish overall? Because they were the last time that we spoke.
Yeah, listen, I think things are bullish. The leasing cycle is such a long cycle. So, over the last 4 to 6 months, we've kind of hit the point in the cycle where all the work that's been done by the landlord and retail community and the brokerage community at large for the preceding 12 to 18 months, we're finally seeing some of these great openings that we've all been waiting for, whether that be on the high streets, in the major market nodes, and the enclosed shopping centers, or the big box parks. There's been a lot of openings over the last 6 months that has fueled some momentum in each of the trade areas, and the retail leasing continues. We've had a great first half of 2024. Inventory, continues to be a bit of an issue heading into the back half of the year and into 25, but still an immense amount of interest in the Canadian marketplace, both by the local Canadian retailers as well as the international retailer community.
Terrific, terrific. Let's talk about street retail versus, say, enclosed shopping centers. How has the demand been lately for, say, high streets, and what are you seeing in shopping malls? And I guess any other sort of retail concepts. If you're doing anything in big box, I'm not sure if that's the case.
Yeah, so I guess on High Street to start, there's been, in Toronto and Vancouver in particular, I think there's been more momentum and excitement than probably quite a long time. And in particular, the Bloor-Yorkville node in Toronto, it seems like almost every couple of weeks we've got an exciting new opening. Most recently was obviously the brand new, beautiful 2-level, 3-level actually, Lululemon flagship on Bloor Street. We've had Arc'teryx open, Bulgari's opened, and there's another 3 or 4 brands under construction currently. So a lot of momentum on the high street nodes, broadly speaking, in Toronto and Vancouver. And we're starting to see life come back on Ste Catherine Street as well. I was in the market a couple of weeks ago with a client. The street looks fantastic. It's getting a lot of energy where the construction is completed. We're all eagerly waiting for more of that construction to be completed headed west on the street. But what is open is looking great. The consumers are responding in a great way. So there's quite a bit of positive momentum on the major high street nodes across the country. And the same would go again for best-in-class shopping centers as well. Those market dominant centers across the entire country continue to gobble up market share and attract some of the best retailers in each individual market.
Let's talk about luxury. Are we seeing luxury retail still having demand, just given what we're seeing currently with the economy? I guess recognizing that this is a long game and not a short game.
Yeah, I think you hit the nail on the head there at the end comment. So I think probably the biggest difference in luxury leasing today from the Canadian marketplace perspective is more of the timing conversation. So there is still demand, there's still interest, there's still strong performance in the major luxury nodes. But it's become a bit more of a timing conversation with brands than it was the 12, 24 months preceding this. Initially it was, how fast can we open? And it was a bit of a race for some of the best space. There's a little bit more of a tempered approach of saying, hey, we want to have these flagship spaces in major international markets, but planning the capital out a little bit longer. In the Canadian marketplace, the 2 big entrants, from a development standpoint is going to be Royalmont here in a couple of months in August 2024 in Montreal with some great international luxury players. And then in 2025 with Oakridge Park in Vancouver in the luxury lineup that they'll be bringing to that marketplace. So luxury will certainly be front and center in the Canadian marketplace for the next 12 plus months.
That is terrific. Let's talk about some specific locations now, and you've already mentioned some of them here. The Bloor-Yorkville area, and we're not just talking about luxury, but the area generally. We've seen some, luxury brands, like you said, just open. Lots of jewelry stores, but also announcements such as, well, we've got Lululemon that's now open. We've got Nike that is coming. Mango, Scotiabank will be on the corner. These are all at Bloor Street East, but the Bloor-Yorkville node has really, well, it's transforming, I think, basically. That's a word I've used in the news before.
Yeah, listen, I like that word. It really has been a transformative time for the entire street, the entire node, really running west to east on the traditional Mink Mile, as they would call it. And it's, again, lots of work for years preceding some of these openings, and it's great to get the energy for the consumers to get these storefronts open. And again, you mentioned a few of those, we mentioned a few earlier. It's a weird position to be in, but inventory has now become a bit of an issue, particularly in Yorkville specifically. There's not a lot of high quality, vacancy availability for brands that want to enter the market. So there's some interesting things, taking place on Hazelton and some of the other nodes in the Yorkville node. And there are a few places available on Bloor Street remaining, but quite a bit of activity on those spaces. And I think you're going to see some more exciting announcements, in the coming months ahead.
Which is fascinating because I remember a newspaper article, it was more during the pandemic, saying, oh my goodness, there's a lot of vacant space on Bloor. What's going on? Will it ever recover? And I think in the back end, there was actually a lot of deals being negotiated that just, I guess, probably these journalists weren't aware of. We kind of knew.
Yeah, and listen, I think it was a combination of a lot of things. And again, you use the long-term approach, particularly for a lot of the global luxury groups. And for them, they saw that as an opportunity in major markets across the globe, as a great time to invest and reposition their assets in various markets. And that took place in many markets, particularly in the North American marketplace. And Toronto, Vancouver, and Montreal in particular, were the beneficiaries of that over the last number of years. And we're also seeing some of that, potentially into Calgary and some other markets, looking forward as well.
Absolutely, absolutely. Let's talk about Yorkdale a little bit. You worked for Oxford Properties for a time and actually was doing leasing there, so you know it quite well. It's also seeing a lot of luxury brands coming in. We've got a new wing that's been developed down, I guess, kind of the center run of the mall, and that's becoming a global destination, which I think is speaking to the strength of the Toronto market, from retail generally, as well as from a luxury perspective.
I always say, and I will always say, I had the privilege of doing the retail leasing at Yorkdale for a short period of time, along with the great team at Oxford there. They've been on an amazing trajectory, really for 10 plus years, both through expansion and repositioning that asset, as an international hub for new to market entrants into the Canadian marketplace. And they've continued to execute on that strategy year after year. I think I've said it before, in the broader context of the Canadian retail community, I think we sometimes take Yorkdale a bit for granted, because you mentioned, when you speak to the retailers globally, it has become a global asset. And that's for both the combination of retail mix that's been put together there, obviously the strong performance, and the partnership with the landlord and their vision for that asset long term.
It's fascinating. Let's talk about Montreal. We talked about downtown a little bit. Ste Catherine Street is seeing some leasing. Actually, one thing that I noticed, Montblanc is going to be moving its store. It's currently at, I think, Mountain and Maisonneuve, and it's moving over to, I think, Peel and Maisonneuve. So that's a positive movement. It's showing that a high-end brand, it's a franchise location, but is still confident in the downtown market for Montreal in terms of maintaining a store in the downtown core. I think that's terrific.
Yeah, listen, I think I've talked about this probably more the last 6 to 12 months. I think Montreal is going to be one of the hottest markets from a Canadian standpoint in the next 12 to 24 months, maybe than anywhere else. And I think that's for a whole host of reasons. We've seen from a city perspective, the amount of investment into the infrastructure into the city that has caused problems in the short term and caused some of the headaches. But long term is going to be great for places like Ste Catherine Street and the feasibility of getting around the city with the REM system and everything else. We've had great investment by the landlord community, Cadillac Fairview and their assets, across the entire marketplace. And then obviously with the recent introduction of Royalmont by Carbon Leo, will be a complete game changer for the marketplace as well, really introducing many new brands into the Quebec marketplace overall, as well as introducing many standalone luxury doors for a first to market experience. Again, we're less than 60 days away from that grand opening in mid-August. Will definitely change the dynamics, but Montreal as an overall market, there's a lot of positives. I think new entrants entering the marketplace will likely lead to further expansion down the line, so long as they have some early success there that we all anticipate. And again, I think Ste. Catherine Street as well, with that construction getting completed, is going to allow for a lot of opportunity and reinvestment by retailers that want to be in the node, but have been a bit hesitant, obviously, with the disruption on the street itself.
Definitely. I think it's a short-term pain, long-term gain for some of that those street updates, because downtown Montreal, I guess more specifically around St. Catherine Street and Peel and McGill College, which are all seeing updates. These public realm improvements and just overall, I guess, renovations to the street, I think probably are going to make Montreal well, maybe the nicest looking downtown in Canada, at least from a infrastructure perspective.
There's going to be there's a certain energy in Montreal in the summertime in particular that I don't think gets replicated elsewhere in the country. Talking to some other retail clients this past week about their stores in the node, and this is their Christmas, candidly, because there's just so much energy and vibrancy and consumers on St. Catherine Street this time of year. And it's a great 12 season market in Montreal, but summertime is certainly an exciting period of time for the retailers down in that node.
Let's talk about Vancouver quickly. We've got a downtown core, which has all kinds of retail. It's also got a Nordstrom box, which is going to be at some point repurposed. And then we've got Oakridge Park, which is coming in 2025, as you mentioned, which is going to be a very exciting, basically a new shopping center. It's a revitalization of the Oakridge Center that used to be there, but really it's kind of a new mall. So let's talk about Vancouver a little bit.
So Vancouver, remains arguably the tightest marketplace, across the country by a variety of different metrics. Obviously multiple vibrant downtown nodes. West 4th continues to add great new retail, and there's a lot of energy in that part of the city. Downtown, both Pacific Center with CF and the investment that they're going to make in Nordstrom, and some additional additions into the Robson Alberni node will continue to create different unique experiences for the consumer there. I think there's continues to be, I won't say oversubscription, but continues to be a strong demand by great global retailers to really plant a flag in the Vancouver marketplace. I know Cadillac's well advanced in working through their exciting reposition of the Nordstrom box, and figuring out what that comes to be long term. And then again, you mentioned Oakridge Park. That is really a once in a generation project in that marketplace, and a lot of excitement building within the retail community for when that opens next year. So that will definitely change the dynamics a little bit, in such a strong customer base in that part of Vancouver.
Let's talk about quickly the introduction of La Maison Simons into the actual Toronto market, and what impact that'll have on the, I guess, shopping centers that it's going into. Simons has announced it's opening a store at downtown Toronto at the Sea of Toronto Eaton Centre. It'll be about 110,000 square feet over 3 floors. There'll be 2 other tenants that were announced, Italy and Nike. And then at Yorkdale, they've announced that Simons will be taking basically the first 2 floors of the former Nordstrom box. About 118,000 square feet is what they're saying. But this is a major fashion retailer that has a, I guess, price positioning on about, say, 70% of its product of being private label. It's kind of almost like a large Zara type of store. I mean, or an Aritzia, like it's private label. It's got great prices for the most part, other than, it carries some luxury brands. But let's talk about the impact of Simons on those malls and on the Toronto market generally.
Love talking about great Canadian retail stories and great success stories, and Simons is another one of those that arguably has the longest history of some of the recent exciting groups that have been making waves in the Canadian and international marketplace. But Simons, as you mentioned, has a unique offering in the marketplace, and really for much of the country is really just getting introduced to their product, over the last 5 to 10 years. They entered the Ontario market back in 2016 at Square One Shopping Center. And they have an omni-channel offering, so it's not just about the bricks and mortar. It's about servicing the customer where they want to be serviced, whether that's in store, online, or anything in between. And I think they're going to have a great great following, particularly in the urban core in Toronto at Toronto Eaton Centre. And we'll also add something different to Yorkdale as well, in the former Nordstrom box. So, they've continued to expand across the country, made it to the East Coast a little bit earlier this year as well. So I'd call it responsible growth. I think they've done a great job of managing their growth across the country with a great historical foundation of a core business. And understanding who they are and their brand positioning in the marketplace and how they can offer that to more Canadians over time.
Let's wrap it up with a quick chat about Edmonton and Calgary. These are interesting markets that I think we would say at this point, the retail is overwhelmingly suburban, but they do still have downtown nodes, which do have commercial activity to them, well, as well as some very dominant shopping centers. I mean, West Edmonton Mall, of course, is a name that people in Edmonton will know and beyond, and CF Chinook Center and Market Mall, et cetera, in Calgary. But let's talk a little bit about the Edmonton and Calgary markets, retail overall. There's been some high-end retail moving into those cities over the last few years as well.
Yeah, two markets that, again, by no fault of their own, I think a lot of attention coming out of the pandemic was on Toronto, Vancouver, and Montreal. But Alberta as a whole has been a highlight for many retailers over the last 12 months in particular. And there's quite a bit of momentum in some of the assets you mentioned in both markets. So I think we're going to continue to see that. The economies in both of those markets remain strong. Obviously, there's a bit of extra vibrancy in Edmonton right now with the Stanley Cup finals going on in that city and highlighting downtown Edmonton and some of the things going on down there. But again, I think we're seeing demand from new entrants to that marketplace that maybe they historically hadn't seen previously. And that includes some luxury spaces. And again, I think between Cadillac Fairview, the Case and other asset managers in the marketplace, they're poised for growth in these assets over the next 12 to 24 months. And the consumer has responded exceedingly well, arguably better than other parts of the country in particular, over the last little bit. So I think it bodes well for the marketplace and some continued leasing momentum in those markets over the next 12 months ahead.
Thank you so much for joining us here today.
Excellent. Thanks so much, Craig.
I'm Craig Patterson. I'm the founder and publisher of Retail Insider, as well as the host of the Retail Insider video interview series. Thank you so much for joining us today, and be sure to subscribe if you haven't already on whatever platform you'd like to consume this content on. We do it on video and podcast. Thank you so much again. Take care and bye for now.